The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This is the 8th of January, Wednesday, and we're looking at the Dow down 110 at 42,418. This cluster formation is going to be so important because if the Dow closes under 42,000 in the next 3 to 5 sessions, that's going to make this all resistance. But at the same time, this is so fascinating to me because what we've got is a kind of a rollover sector by sector by sector. And the last sector, which we had actually started position in, which got zonked overnight, it was actually holding very well yesterday, is the Defiance Quantum ETF. And what happened was it went very nicely in a rectangle formation, quite gapped up and went to a leg B yesterday within this rectangle. Normally, it would pull back a little bit and then go to a C and then a D and test the 90.75 high, all-time high. That's the kind of what we anticipated, and maybe go a little bit higher. But that would be a target, and then we'd have to see how it held on any pullback. Because if it broke a halfway marker of the rectangle, it says whoops, you can go all the way back down. But what happened was because of all the different with NVIDIA yesterday getting absolutely, I mean, look at that. Had a huge red candle, one of the biggest moves to the downside, certainly point-wise, maybe not percentage-wise, but point-wise. That impacted, and this is what I was talking about when I said there's going to be some kind of a rollover, sector by sector by sector. In other words, the idea of tops being formed in rotation, bottoms are formed in unison, because each one has its own momentum tide that goes to its top, said to me that there's a chance that we get another flurry of activity in a very overbought condition, to highs, and then we come back down. Instead, there was this NVIDIA report, had a conference, or at least there was a guest speaker on, what's today? Today's Wednesday, on Monday, and it seemed like it should be okay, and in fact, it was taken as a negative, so it impacted a whole bunch. So now what have we got? Let me just show you this. So we've got the Dow making its high on the 4th of December at 45,073, just missed making a leg D. You made a peak C, and that failed. And the S&P made its high at 60, just under 61, at 99.97 on the 6th, 2 days later. The QQQ, and the S&P is down 3 at 3.25 at 59.05 right now. The QQQ made its high on the 16th. You see that rotation at 539.15, and a 533 round number the day it made the high. A round number in 100 stocks. It's amazing that it could do that. At the very high, 533, it goes to 539.15, and then tumbled. Chapman wave silent doji candle the following session, and then plunges, and then rallies, and then plunges again, rallies, and then I have to say it was a plunge yesterday, but it didn't take out the left side low, and that's what I'm saying. So now let's go to this. The IWM, the Russell 2000, made its high at a peak E in the Chapman wave methodology at 244.98 on the 25th of November. So you can see what I'm saying when unisons are made, the ictus, like in October or a March low, every year when we get those, it's usually in unison within a day or two. Remember that 2009 was on the 6th of the Friday, the 6th of March for the Dow. Day we went long there, and on the Monday, the S&P made its low. Actually, it kind of fooled a lot of people because it took out some people that thought that they had the low on the Friday, and then it took it out and then turned around. So all I'm saying is that the lows are in unison, tops are made, but these are daily tops. And if you're looking at the weekly tops, let me show you something here. The XLK, which is the S&P Select Spider Fund, made its high around about December the 6th. But look how many times it's tested it. One, it had a Chapman wave inside track repellent zone. Let me talk about this. I'll treat this as if it's Technical Friday. So you see these two trend lines here, little narrow mini channel. I've been discussing this forever. I discovered this years ago. You can put a trend line, but a trend line is just a trend line. I like to put it in as two trend lines so that you've got a little mini channel. And now what you've got is you've got a distance, you've got a space, you've got what do they call it? You've got the strip, you've got the, they call it in Gaza, they've got, it was in Egypt, they've got this narrow little lane. It's a channel. And this channel says, don't cross the channel. But if you do cross the channel, these are the parameters to monitor. And look at this. It went into slightly declining, a 3% decline. And it could not, on Monday, take out that high. The high was 241.88. 241.88. I must write that in. Oh, come on. Click. 241.88. And it was 12. Oops. I'm going to put 9 for now. 24. And look what happened. Every time it got so close, look, it even got on the bounce after plunging sharply. The bounce on the 26th went to 241.57. I mean, really, huh? It was the 6th. Oh, it wasn't the 9th. It was the 6th. So 6. Okay. So now what we've got is we've got this pounding at the door, couldn't break it, and now you've got on the downside. So this is going to be very important. Right now, the XLK is down 120 at 232.68. If it takes out 229, that's a big problem. Closes under 229 in the next week, and that's a big possibility here. All right. So I wanted to go through those to say, together with the SMHs, the top that was made at 263.58. What was the high right there on round about October the 12th or 13th? It was look, there it is. Did I type that in? Yes, there it is, 262.26. It goes less than $1 or just over $1 higher yesterday, and then it pulls back sharply. But look at the rectangle that semiconductors have been in for all this time. And look at NVIDIA. NVIDIA is now down, trying to rally. It's up 13 cents, but it was, in fact, trying to it got all the way to 143 after hitting the 140s low, and now it's at 140.27. So we're looking at the rotation that says now the tech sector becomes a lot more vulnerable. Remember Amazon with its round number high? Well, Amazon is trading 223.00 on the 16th. Now it's trading 220.84. Back, Basil Chapman, Tiger Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I forgot to mention that for subscribers, I said in my Dow chart that I send out every day, that for the second day, yesterday being Tuesday, and on Monday, I had a very low trend gauge reading, which suggested that no matter how high the Dow futures were up, there should be a pullback to negative, which is kind of what we got. And today, we've got a negative Dow. And the rule is that it goes negative before it attempts a rally. So I just want to mention that. I use only certain numbers. It's Richard Arm's short-term trading index. I call it Chapman Wave trend gauge only because I use two numbers, either on the upside or the downside. If it's on the upside, a very high reading, it says that the E-mini futures with that night into the next day should have a rally. Even if it's lower down, it should still have a strong rally. And if it's very low, it says the very, very next day, the Dow cash should go negative intraday, even if it's by 1 point. And sometimes the Dow futures are up 300 and something points, and it pulls all the way. The other day, I had to call it a miss, even though the futures were up 300, even 400, and then came all the way back to about a plus 40. But that, even though it was a huge pullback, I had to consider that a miss because it has to go negative. All right, so with that said, the question is, with this arch formation and with Nike being a Dow stock, what do I anticipate? Well, 70.75 was the low back in July, I think it was July, August, and then it ran all the way to the 90s, and now it's come back in this arch formation. I didn't draw it in. Let me just draw this arch formation right here. And I chose the this candle, a semi-doji type candle, to say that this week is the week that it should test 70.75. It's trading, what was the low today? 71.25. So it hasn't got a long way to go, but that should be the test. But these consistent lower highs and lower lows, like the Dow, look what happened here with the Dow. It's making lower highs and lower lows, and that rally couldn't go all the way to a full lowercase h to a lowercase m. It's got that pattern, but it didn't go high enough. So that says it's a little bit vulnerable, and I have to be careful here because although we are long the Dow for some time, I haven't got any new positions, and we're just looking at it to say, hey, wait a minute. It looks to me like that 42,146 level is going to be taken out unless by Friday, whatever the jobs report is, by Monday, the 13th, or Monday, what is the date? Monday is January, right? January. Yeah, the 13th. Very special day there. We're going to see what happens. We see the best I can see is that there's another arch formation, and I see the 43,373 level in the Dow as really difficult to break in this first part of January. All right, so I got that out the way. So Nike, a little bit vulnerable here, testing that 70-75 level, just because the MACD is weak, the 9-period, sneeze. Excuse me. Oh, gosh, every show, huh? Yeah, so we're watching this closely. The stochastic at 2.77% is the equivalent of the inverse of 98.20 or whatever it would be, right? So, and when it's that, I always say that's fantastic. But don't forget, in the 90s, you're going to see a pullback into the 20s at some point. In this case, I can't guarantee that you're going to go back into the 90s, but I can say it's flat, and I don't see any sign yet. And the MACD is still, in the weekly chart, all the technicals are still deteriorating rather than stabilizing. So I'd be a little careful there. And the 200-period moving average in the monthly chart is held at for 1, 2, 3, 4, 5, 6, 7. So out of 7 months, it's tested that 4 months, and this month included, and is below it right now. So I'd just be a little careful looking for a bounce in that. Next thing I had was a question. Let me go on. So look, gold is up a little bit. It's up 14 in leg D. Now, in the Chapman methodology, when you get a buy signal that goes to a buy mode and the stochastic's still only at 62%, so either it's got a long way to go or it's just about to run out of power. But I'm going to talk about it in the sense of what's the chart saying, because today the 9-period moving average flipped to L, meaning long. This is just the 914 tool itself has gone to a long. The MACD is long. The stochastic is very weak at 62%, but rallying, and the on-balance volume is rallying, but still pretty weak. So I don't like to see, it hasn't made a peak D. I mean, this leg D can keep going, but I don't like to see Ds way below the previous high. That just says you want to see a strong leg A and then a B and a strong leg C and a strong leg D, and the D takes out the left side high. That's fantastic. When it does this, it says, it's probably just stuck in a range. And that's what I'm thinking. Gold is not breaking down, but it's just kind of stuck in the range. And you can see that in the weekly chart. You can see that in the daily. It changes completely if it starts to trade at 27.26. 27.26 or higher. Wow, that's going to be very nice. But I'm watching it for now. Look at silver. Silver is moving up 17 cents at 30.88, acting quite nicely here. The 9-period moving average hasn't crossed positive yet. But most importantly, it's really, now the chart pattern is looking less favorable than the gold. Sometimes it's the other way around, but right now, if you're looking at high-grade copper finally had a decent 3 days. Look at that, fabulous move up, 4.25. Right off the 200-period moving average. So that I have to use and consider that it could be a trigger. There are a lot of shorts out there that I'm looking at on the short term. So at any point, we could get a squeeze to the upside. And when that squeeze is squeezed out, that's where we want to see, does the market now with all of the indices roll over, or do we start to see that you've had a big consolidation in some sectors, and now they can independently start to move up as the sectors that were very strong move down. Okay, with that said, I had a question about where to go. FXI, that is China large cap. China large cap is making lower lows. There's the left side H pattern in the weekly chart. It's taking it out, but it hasn't closed underneath the low of 29.36 on the 26th of November. The low today is 29.24. The day is young. If it can close above that, maybe it closes above that. And in 2 days' time, it's running to the 30.7 or 30.36 area. So far, this is really not a very good sign. Okay. So I did that. Gesundheit, thank you very much. BBAI. Oh, BBAI. Yeah, it made a peak C. Now, that it can't be an alternate count. A, B, C. Yeah, it could be an F/B, G/C, and this could be a D rather than a C. It doesn't matter. What is happening is that the MACD's turned down, the on-balance volume made an M-shaped top. The stochastic's now at 61%. The 914 is still strong, but it's starting to tip down. And the weekly chart is underneath the very important 200-period moving average. This is Big Bear .ai Holdings, Inc. And I'm just going to say to you, be a little careful, because by this coming Wednesday, in other words, give it 3-4 days, I want to see at least a touch of the 450 level. If it can't do that, then instead it takes out 325, that's a problem. Then it's going to continue the pullback. That's Big Bear, BBAI is the symbol at 358 down 38. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, so in the den I was asked about is silver bottoming here. And just immediately my first response is, I don't think it's bottoming, but I don't think that it's, I just think it's in the process of trying to bottom. The real bottom was back in July or so when the SLV, iShares Silver Trust, made that low that was in the 24s and then ran all the way to the 32 level, or just under 32, and now it's pulled back. So it's a work in progress. But if you look at the, let me show you this. This is the silver contract itself. Let me just get there right now. Look, SI, I drew this in and I said, there's a huge cup formation being formed if the dreaded H, what's the dreaded H? I'll just do that as I always do, just to show you. Oh, wow, nearly made a mistake there. Oopsie. Okay, this is the dreaded H. It's where the lower, there's a sharp pullback, then there's an attempt at a bounce, and the bounce fails at a peak A or B, and then it tests the left side low. And if it takes it out sharply, you can go 1-to-1 to the downside. But if, in fact, it holds and then it rallies and then it closes 2 out of 3 sessions, consecutive sessions, above the arch high of peak A or B, that's really positive because then you can go into a cup shape. Lo and behold, look what we did. We had a sharp pullback, an H pattern. That's your A right there. That A was not superseded by a lower low, so that becomes an A minus. That's still an A. And there's your B. And it's the third session above the arch high. So that says you can go. Where can you go to? Well, I always look for the left side, a doji candle, a gap, some significant icon on the left side that you normally would look at as either a resistance point or a support level, where there's this little doji candle. And that just says if it closes above this doji candle of the 16th, which is at 31.24, that's going to be very positive. Today's high is 31.045. But your question was SIL, right? SIL. SIL, that's a different pattern altogether. That's the Global X silver. So I have notated this in the monthly. A, B, C, D made a peak E with a sharp pullback, but the 9 still very positive over the 14. Pink in the short term here is pulling back in the weekly chart. And the 200-period moving average of 31.58 has been incredibly important. And once again, it's important for a little bounce. But this is not a great chart pattern at all. And that's the thing. Someone mentioned something about using different chart platforms. Yeah, that's how my trend gauge, sometimes I have a completely different trend reading to other people because it gets measured. By the time it gets starting point, it might be a particular time of the day, or it could be midnight, it could be anything. So those things change it. But the pattern usually is pretty close to the patterns themselves. So let me just say that within the context of the silver bottoming, I think it's a bottom. I don't think it's the bottom. And if you look at SLV, you'll see that there's a nice rally, and the rally, there's the gap. So the gap in this would be the high of the 16th. That's the same candle that we had used before. So I'll give you a price point, 27.91, which was the high. And that was, in fact, the high for this whole move before it started the rally. So 20, if it gets into the gap, that's kind of positive, at least for now. But the weekly chart needs a lot more work. Hope that answered your question. Next question is, okay, I did that there. Yeah, could you do crude oil? Well, crude oil right now is just pulling back. It's up 8 cents at 74.33 after. Now, I had drawn this in a while back, been discussing it for a little bit. My first level of target for the crude oil was set on the continuous contract is 73.14. The high, remember, go by the dates because it's a continuous contract. It gets smoothed out. So the date of the 8th of October had a high of 77.36. That's my next level. I have to go one level at a time. And it said that it achieved exactly what it had. Yes, the Chapman wave. There's your arch formation that becomes quite an M. Lowercase h goes to an M. And then it goes to yet another one, but successful. And it breaks and it closes 3 bars consecutive bars above the highs that were made right there in November. So crude oil right now is in a very positive mode on the daily chart. The weekly chart is testing the inside track repellent zone. You just saw that in whatever I was showing you a little earlier. And it's got to break, and decisively, so that it can get to the high that was made. Crude oil's high of 77.36 was made the week of the 11th of October, and that really applies to the monthly chart as well. And the monthly chart, for the first time, I have to wait all of January to see if it's going to confirm, has gone to an L, meaning the 9-period moving average went pink for a little bit, and now it's gone back to green. So they are a good sign. So the question came in, I don't know, I can't find it right now. I'd mentioned with the interview yesterday with Jacob, I mentioned RIG. RIG is what we are long for subscribers to the opening call, Transocean Limited, offshore drilling, oil and gas. So this has Chapman Wave inside wedge, dash green, resistance, target resistance level. And it hit it exactly yesterday. As I see it, this is a little bit aggressive. I would have preferred to move it out, but I wanted to keep it to the low, the plumb line low of the 24th of December. 3.40 was the low, and the high that was made on the left side of the 4th of December at 4.45. So the number of bars there says if we have the same degree, the angle of ascent, RIG should get to resistance, maybe the 4.23 level, sometime by the 9th. Wait a minute, 9th is... Wait. Today's the 8th. That's tomorrow, huh? Right, by the 9th. But I don't think that's the case. I think it's going to extend out. And I did this a little aggressively. I would normally go to this level right here and say, I'm comfortable with saying that by next week, there should be a test of 425. So percentage-wise, doesn't sound like much, but percentage-wise, trading at 4.08 right now, 425, 14, it's about a 2 or 3% gain. So yeah, and the key support right now is it's at 409. A close under 4 says it can stall for even longer, but that's what I'm looking at. Just using the measurements, same measurements that I used in the oil. If you look at natural gas, that's kind of stalling. It's walking the 9-period moving average and 14-period moving average support, but it hasn't really broken out. It hit 4.20 about a week or so ago, and now it's at 3.63. Now, natural gas, if it closes any day in the next, between now and Monday, above 3.85, that's going to be a good sign for natural gas. I'll be back in a moment. Dow's down 97, S&P's down 8. Basil Chapman, Target Predictions Hour.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back, and a question in the Tiger YouTube statement. Gene says, I'll try it on TradeStation. I think that's the chance Basil is using. Yes. You know, all I could say about the trend, don't worry about what other people do. Use it and then use it to your own configuration so that you're working apples to apples instead of apples to oranges. So whatever that gives you, it'll just be consistent and give you the same numbers, and there might be different numbers to someone else. That's all. But I've been very comfortable over the decades that I've had TradeStation. It just does the job for me. I'm not happy because I have to notate every single letter that you see on the thousands of charts that I show. I've had to type in. Steve Rhodes done a really great job automating, but I just find that there are some subtleties that I consider to be very important for my work. So I do it by hand. I've not had success yet with the automated. Sometime in the future will come back and say, oh, yeah, we could. Oh, why couldn't you? But I think I'm starting to work a little bit with ChatGTP, and maybe that's going to help me. So Myrna, so this is Moderna came in as a question. It was on my list. And something happened with Moderna. I think they had something that was positive yesterday. It went to a leg D. Remember I was saying the Ds that don't go all that high are the ones that are – I like a big look, A, B, C, D. Look at that. It goes from 80 to 160, 70. And here it goes from – percentage-wise it's big, but it basically goes from 37 to, maybe a percentage is 48. That's a big percentage. But on a chart basis, it's so way underneath the 5670 high of the 7th of November that I have to say it's good action. So what I was doing over the last 24 hours is I've been looking to see which sectors have actually been holding quite well. And there's a little bit of sign that says that the medical area, I'm not just saying specifically medical devices or anything, but the medical area might finally be seeing a little bit of love. So Moderna is in that category. I mentioned to subscribers today, I gave a list of a couple of them. I said a stock that we have is Solventum. It was acting so nicely over the last couple of days, and that's a good sign. Now it's holding the 914 period moving average is still pink. It should have gone green. It hasn't. We're along from way down, and we've also got we've traded it. And we've had trading positions to daily leg Ds, etc. But at this point, I was about to say 2 days ago, let's get that because it had a good candle. Then I thought, no, There's just too much going on in this market. So, but this is Solventum Core Healthcare spinner from Triple M. I also mentioned BSX, which is Boston Scientific. Oh my goodness, look at that move today. This is on the list, and I thought, why bother? It's at a high. I already had a bit of a mistake getting quantum QTUM, which was not at a high. It was a good percentage below the high, but thinking that it should go to the high, and it never did. So this is one, for ages it's been on my list, just never go. You could have grabbed it anywhere because the 9-period moving average from when it crossed over Boston Scientific back, this is embarrassing. The week of the 17th of November, 2023, let's go to the high of that particular week, at 55. Let's go from 55. I would say 55 with a green 9-period moving average, still strong, and today it's trading at 96. That's not bad, huh? Boston Scientific leg F could even be an instant restart from the monthly chart, peak D. 2 months later, it went to a leg higher, so that's an E. But when it goes too high, I usually say think of that as an E, and it could go to an F, maybe even a G, but then it's going to pull back quite sharply. Hasn't done that yet. So Boston Scientific, what was the other one? A couple of others. I typed them in here. Halo. So this is an interesting one. Another one that's just always on my list, but I haven't really done anything. Look at that. And a beautiful, I love this rectangle formation where there's a spike up. It's like a long stalk leg formation, but that's usually a 1-to-1, and it did that today. This is, what is it called? Hello Zyme Therapeutics. Nice move up, but it's given back quite a bit of the gain today. It's up 90 cents at 52.09. It went to 55, round number high. Wow, those round numbers can tell you a story. 55, round number high. Okay, and it's pulling back. There's a 1-to-1 to the upside. What was the other one? There was another one. NTRA. Yeah, it's testing the highs, all-time highs. The high was in the 175 area, it's trading 170. Yesterday, it hit 174 something. Nice cup formation. Cell-free, Natera Inc., cell-free DNA testing, primarily women's health, oncology, organ health. There was another one. Yeah, Pfizer. I had spoken about this a while ago. I decided not to go into Pfizer, even though it was giving some good signals, just because that monthly chart was just so horrible, and the weekly chart has improved a lot. But look at this. It went to, from a low that was made just around 24. I think it hit 23.99 or something. 24.48. 24.48 on the 15th goes peak A. That's a peak A underneath. That's gray. And then a peak B. Pulls back, goes to a C, D. Almost like an instant restart, but it pulled back sharply. So then it went to a gray A underneath, and then it went to which is slightly higher, and then a G/B. So this is now working very nicely, Pfizer, but it needs a lot of work, and they have other problems. But this is a really good introduction to some kind of a weekly start of a longer-term move up that makes that whole 24 level. It's only at 20 right now, 26.87. It makes this whole area of 24 absolutely imperative to hold in January. Maybe let's go all the way through February, because it could make an arch formation. But it's and it's saying to me, what is it? Medtronic, MDT, Medtronic. Oh, nice move up today, Medtronic. So yeah, that's what I was saying. That I think this whole medical sector area, medical healthcare, just very specific, might be under the radar as the areas that were so overbought become somewhat vulnerable. That's what I'm looking at right now. So what would I do with Medtronic? It's trading at 82.36, up 2.49, up 3.12. I don't know if this is earnings or anything like that, but all I can say, regardless, it mustn't in the next, what's today? So we only got today, Friday, and Monday. Tuesday, by about the 14th, if it hasn't taken out 81.50 on a closing basis, but in fact it even makes a higher high than today of 82.86, that says good. This could be one that is a possibility under the radar. Medtronic, medical devices. I think an Irish company bought them. They did horribly from the 135.89 September 2021 high, plummeting right down to the 60s, and then having a bounce into the 90s, and then just giving it all back. This is the first sign. Look at that weekly on balance volume turning up a little bit. Okay, that's a good sign. I need to get to... Yeah, okay, so I'll be back. Dow's down only 74, S&P down 8. I'll talk about the bear market in the daily.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
About 3 things. Number one is, in the E-mini right now, you can see how nicely it's come off the bottom. I mentioned as we were going to the break that this is not the usual bear market. The bear market should have had everything, just those, remember, every day should have opened with the Dow down 380 to 420, the S&P down 68 or 58 to 63, and then tries to rally, then closes at the low of the day. The next day, it's the same thing. That might have to be where we make some kind of a low, a real tradable low. I don't know. But this is rotational, and therefore you've got some support. And that's going to be really important in terms of how these weekly charts on Friday close. It's going to be very important. We've got a jobs report coming out. Jobs report today was a little low, so the market should have held very well. Day is young. That's number one. Number two is, within the context of this market, I'm looking at the rotational aspect. We've been able to play the upside very nicely. This last week was a little just difficult in terms of getting traction, because it's one day up, one day down. One day it's been just really choppy. So the traction is really important. And the third thing is, on Friday, I hope I can do it. I've got, I'd scheduled surgery for tomorrow. It's same day. It's in and out. So we'll see if that's okay. If I'm able to do the show on Friday, I'll try to do the show on Friday if I can. But otherwise, I've said to subscribers, whatever I've said for today, that applies to Friday as well. But we're actually not doing very much at all. We're kind of watching closely to see how support holds. And the third thing is the volatility index. If you look at the volatility index, and do we have time? Yep. Volatility. Before I hand you over to Steve Rhodes, should be a great show with Steve as always, and all the great programming here. Look, the volatility index hit that 2832 level on December the 18th. So the VIX is holding high, and that says fund managers are still buying insurance, and that's important to monitor. If the VIX goes to 22, this market is going to fall quite sharp, much sharper. But if this